Hello, everyone, and welcome to the Relm Risk Briefing Cannabis Report webinar. I'm Alex Kadaji, Senior Analyst at Prohibition Partners and one of the co-authors of the report. I'm also joined by the lovely Claire Davey, who is also the co-author of the report. Would you like to introduce yourself, Claire?
Hi, thank you for having me, Alex. So I'm Claire Davey. I head up Product Innovation and Emerging Risk at Relm Insurance. And Relm is the first dedicated insurer to emerging risks and sectors. So it gives a bit of an overview of what we do.
Yeah, thanks, Claire. So yeah, exciting times. We just launched our report. So the Relm Risk Briefing Cannabis report is something that Prohibition Partners and Relm did together. Where we covered the general state of the global cannabis market, the challenges operators face throughout the supply chain, as well as a macro overview of the challenges and risks the industries are facing. In the first section of the report, we take a macro look of the risks and challenges of the market as a whole, also identifying the key markets in North America and Europe, something that we'll be covering today. And on a micro level, we actually looked throughout the international cannabis supply chain, had conversations with leading operators, interviewed them, and provide case studies and the risks involved, where we talked to the operators, wondering what their risks are and how they mitigate their solutions. So it was a very exciting project to work on with you, Claire. And so it comes to the question, like, why was this report needed now at the state the cannabis industry is in?
Yeah, I think overall we felt that there was really an opportunity to start connecting the dots or drawing connections, right, between the current cannabis market and its landscape, whether it's regulatory, but also its market opportunity, but then also risk management and insurance capital, because the availability, for instance, of insurance capital is very much informing the growth and market size and availability of cannabis, globally. And I think really there were two aims in that. One was to get insurance professionals comfortable with the cannabis market and its existing and evolving regulatory landscape. And the second was really to show how insurance could start to play a role in driving standards and show cannabis operators some risk mitigation strategies of how they could really level up that governance to try and, I guess, increase insurers' appetite to take on their risk.
Yeah, I mean, when I was looking at the report and like working on it, it was obviously when we looked at cannabis in the past, it was a question of how can I obtain a license or a permit. Now it's how can I maintain my license? How can I survive my inspection? And how can I be aware that my partners are compliant with the regulations? That was something that was always kind of in the forefront when I had the interviews with the client, with the operators, as well as the sector itself has scrutiny, so actors have to be very vigilant and on board and compliant on a daily basis, on an hourly basis, to make sure that their health, not only for the industry but for the company itself, manages it. So like an underlying theme of the report was compliance and regulations, and it is like a factor as to why company operates successfully or doesn't.
I think just to sort of jump in there, when you talk about license compliance, really what insurers consider to be the bare minimum and of an insurable risk, right, is to have the required permit and license. And I think that is a condition precedent to coverage. So we would say, you have to have that license in place, you have to maintain it to have coverage under the policy. But in order to get the broader coverage available and more preferential terms and perhaps be considered for slightly tailored solutions, I think cannabis operators really need to be seeing that compliance journey as, how do I improve upon this and not only maintain, but I'm constantly like evolving and developing our sort of risk posture year on year.
Yeah, for sure. It seems like the cannabis industry, especially with the operators that we talk to, have to go above and beyond with just complying with the regulations. They know that regulations in itself aren't uniform throughout the cannabis industry. I mean, it is the regulations are the key factor to a market's growth, but also to a company's health and how they basically evolve with those regulations. You know, many involved in the industry, not involved in the industry, just kind of have the idea that cannabis is now legal medically or for adult use. That all I need is a permit, and there we go. It's easy to start up a company, but the truth is, it's very complex, and especially in terms of international supply chains, there is no uniformity in regulations, and that comes from bottom up and down from a macro and a micro level. One good example is if I bring up the European map right now. I mean, here you can see that in most territories in Europe, there is a medical cannabis framework. It's already a fairly large industry with around $1.5 billion in market size in 2025. Many countries have legalized cannabis of some form in for framework. However, how the markets operate and how the companies have to operate differ completely, and that's all driven by the regulations. And it determines the regulations determine how cannabis can be produced, how cannabis can be prescribed, imported, exported, and distributed. I mean, even looking at certain markets, Germany, for example, it's under a doctor's discretion how it can be prescribed, but in other markets, you would need to have a specialized doctor for a special treatment. So understanding the regulations is of utmost importance for a company's success in the market. Also, one example would, sorry?
With this sort of jigsaw approach to regulation, right, which is what we're seeing with these different colors, I think it creates the challenge for operators to show how they are compliant in all of these different jurisdictions who have different requirements, but also if, say, raw materials or production processes are happening in different jurisdictions, how that is being governed and evidenced throughout the supply chain, right? So when we're looking at underwriting, it's not just about the finished product. We are looking at, its journey to creation. And I think one of the biggest challenges, not only for the operators, but also insurers, is how do you serve an industry, right, which is trying to respond to such a fragmented regulatory framework. And I think that really, really needs to shift.
Absolutely. I mean, it's a fragmented framework that keeps on changing. And even if a market is open today, so for example, Germany, we saw the adoption of the cannabis law in April 2024. Cannabis got removed from the list of narcotics, and is no longer classified as a narcotic. However, in the medical terms, it's still a prescription medicine. What we saw there is an opening of the market. It's the freest market in Europe. There's over 200 distributors, thousands of products, and this momentum and rise was kind of unprecedented, and that in itself has now fueled, a lot of private businesses, but also with this private business environment has caused a lot of outcry by the media, by the public, and the government. And there are talks of shifting the regulations again, of making it a bit more tightening the regulations. So One example of following to what we saw in Germany would be Poland. Poland saw good growth throughout 2024, and then at the end of 2024, they placed restrictions on telemedicine platforms, so telemedicine clinics, which were the most most used avenue for achieve getting prescribed medical cannabis. But once the restrictions came in, we saw growth decline significantly. We're now seeing the market growing again, but that's because we saw a lot of clinics evolving with the new regulations, just allowing in-person consultations for first-time prescriptions, and the operators had to create mobile clinics to get the same outreach that they used to have with teleclinics, which is really kind of fascinating that it is a living organism of tightening and opening, and the countries are still learning in Europe as to how a medical cannabis framework is going to look like and how the cannabis framework in general is going to look like. I mean, another example is the UK. We're seeing it as a pretty free market where domestic production and its prescription can be all happening within the UK. Imports are coming in. However, the growth of the market is limited by the strict licensing regulations, as well as the lack of prescribing doctors. So we're seeing smaller growth compared to Germany, let's say. Whereas when we look at Finland and Norway in more restricted markets, medical cannabis can only be prescribed on special circumstances and for specific treatments that are hard to treat and conditions after all other medicines have been used. And to actually achieve a medical or receive a medical cannabis prescription, you would have to go through a strenuous process of going through specialized doctors, applying through health authorities for special import permits that only last for 30 days. And doing that on a routinely basis can be very strenuous for a patient, but it also shows that, for companies coming in, they have to be aware for their strategy of expansion in Europe, where actually do the opportunities lie, and where are you going to take the risk to actually evolve your company. However, when we look to the US market, which I'll just put up the map now, the US is a completely different beast altogether. It is the largest cannabis market in the world. There are roughly 40 states that have implemented some sort of medical cannabis framework. You have 24 states that have legalized it for adult use. However, the difference in the US is its states also have their own laws and regulations. And what we were seeing was that the regulations are the key factor to the health of the companies and the industry itself. So if we look, we examined California, New York, and Massachusetts, and there we saw the same kind of underlying issues where high compliance, high taxes, and high licensing costs were impacting the financial health of the companies, as well as the amount of licenses that were issued by the state was driving competition and squeezing out margins, making it difficult for many operators to stay afloat. On top of that, the US also has a very strong illicit market, and that also has a negative impact on legal operators. But I guess what many did hear is the news at the end of last year that reclassification might happen in the US. Trump's administration said they'll reschedule cannabis from a Schedule 1 narcotic, which to a Schedule 3 narcotic, which just for your viewers out there who aren't aware, Schedule 1 narcotic means that there's no added medical value, whereas a Schedule 3 narcotic means there is. However, as it is still a Schedule 1 narcotic, they are bound to, the medical operators are bound to their own state. So actually operating cross-border trade is deemed illegal and is a federal offense, meaning that supply chains have to occur within the state itself, meaning that there are a lot of inefficiencies, and a lot of companies such as multi-state operators need to replicate their supply chains in multiple different states, which if we're coming from a globalized supply chain level, it's a very, very very inefficient system. Many are hoping that the Schedule 3 reclassification is going to help a lot of the worries that cannabis operators are currently having in the medical industry. However, how that's going to be implemented still remains to be seen, and when it's going to be implemented also we're not fully aware of. But I think that in itself shows that there is a underlying maturity in the market and a growth of an acceptance towards cannabis becoming more mainstream. I'm just going to remove the map here, but especially when when we highlight that cannabis is moving towards the mainstream, like every other industry, with robust, seeking robust supply chains, and a lot of capital getting invested, the need of insurance is vital. If a lot of investment, you want to make sure that your investment is secure. So in your scenario, looking at the cannabis industry, how does insurance differ in the cannabis industry compared to others?
I think it touches upon what you were just talking about, but there's essentially two pillars is the way I sort of view it. And one is the appetite of the insurers themselves for this sector. And the second is the client needs in this sector. And the appetite for insurers is very much influenced by this regulatory inconsistency, but also fluctuation. So each insurer has their own appetite for risk. And I don't mean risk of insureds, I mean their own reputational risk, their own regulatory risk as a financial institution. And they want some level of certainty that if they proceed into this sector, then it is going to be a sort of a longer term initiative, and that there is a good market opportunity there. And I think when we look at the federal versus state issue within the US, and then also the dislocation of regulation across the EU, that's not really providing insurers, I guess, with a lot of certainty around what they can and can't do, but also that there is going to be a longer term portfolio opportunity for them, for instance, that there's quite a low market maturity in Europe. And so do you invest in one of those European countries or all of them? And I think there's a real opportunity there for the EU to get together, right, and try and find an holistic approach or solution to regulating, right? Because it will then attract insurance capital and I'm sure other investment capital. And they really need to work together to kind of offer that boost to growth, but also the operational resilience piece. And then, that whilst insurers may have appetite to write what I would call very vanilla lines of insurance for these businesses. So a good example would be directors and officers insurance, which is very important for sort of the longer term stability of an organization to attract good talent to the boards. It's not necessarily specific to a cannabis business's operations and risk. And so whilst insurers may be comfortable operating with those lines of business, we also need to be thinking about, and this is where we move on to the second pillar, is the client needs, right? And they are different from an online retailer. for example, or a hotel group. I'm using those as quite left field examples, but we really need to be thinking about what are the client's needs and where is the dislocation in the insurance market. So a good example might be in the US, thinking about it from a consumption liability perspective, like would that help facilitate growth or other opportunities? Is it product recall? Is it crop failure insurance? Like, how can we take what insurance has already done for other sectors and really think about its applicability? How can we adapt it, and how can it really offer that resilience and sort of turbocharge that industry? So I think those would be the two pillars, and in terms of how I think about insurance and cannabis and some of the challenges there. And I think risk maturity. Sorry, are you going to go?
Yeah. I was just going to say, from the client's point of view as well, is like you from an insurance side, you will also need to see how they are de-risking all of their risks, right? And what strategies and mitigation solutions they're currently providing and undertaking to make sure that they are a viable company to insure. This is something that we'll highlight in the other webinars, but also something that we go through extensively in the report. So I think, we cover I think the main factors is obviously security, compliance, governance.
And it's offering that data transparency to insurers. And I think the challenge that we have is that what good looks like for an operator in a certain country in Europe is going to be slightly different to the US, for instance. There's different rules, regulations, standards. And so each risk needs, a full understanding of where they're operating and how they're doing that. And we try and get into what those best practices could be for risk mitigation in those specific areas of the supply chain. Within part 2 of the report, which I think we'd like to sort of really dig into separately in follow-up webinars. So that's the plan.
100%. I think that actually sums it up pretty clearly. So I think, we will just wrap it up here, but looking forward to the following webinars. Also, have a look at the report. We do cover the risks and the mitigation solutions extensively. As said before, it's kind of needed to have a report like this, which hasn't been published before. Also understanding the current and the future risks that are involved for operators either already involved or seeking to operate in the industry. So yeah,
I was going to say, I think the next webinar will look at that upstream piece. So the upstream supply chain and for cannabis operators. So really thinking about the cultivation, the manufacturing process, logistics, and then in a subsequent webinar after that, we'll think about more the downstream. So how does it get to market, the retail piece and the risk there? Because I think it's really where a cannabis operator is focused is really dictates or shapes the risks that they face and therefore their potential risk mitigation strategies. So it's helpful to consider it through that lens.
Yeah, I think that's a great idea. Thank you everyone for joining the webinar. Thank you, Claire. Hope everyone has a great time reading the report.
Thank you. Is all good?